Another trading week is drawing to a close right behind me here at the New York Stock Exchange, and stocks, well, they're on track to see a third straight losing week, courtesy of earnings as well as rising bond yields. Now, in terms of earnings, we had nothing more shocking this week than Netflix, which saw the streaming giant plunge after reporting its first ever subscriber drop by 200,000. They were expecting a growth of 2.5 million, and revenue also fell short of expectations. The news not only triggered a sell-off in Netflix shares, but other streaming media companies as well. And then there's Treasury yields. The markets were off to a strong start on Thursday, but then Fed Chair Jerome Powell popped that bubble after he said during an IMF panel that taming inflation is, in quotes, absolutely essential, and the 50 basis point hike is on the table for the month of May. And after reversing higher following Powell's comments, the U.S. 10-year Treasury yield hitting a 3-year high. And now a new trading week awaits right behind me here at the New York Stock Exchange. Will it have as much news and reports that will make the markets finally move in one direction, or will we see continued choppy trade? Let's now take a look to see how the markets are shaping up to start off this new trading week here on Wall Street. Now, we kick off the week on Monday, April 25th, and that begins in Germany with German April IFO expectations, that of which is expected to come in at a read of 82.3. Tuesday does see a pickup in action, but first, we're in Japan with the Japanese March unemployment rate on the docket. Expectations call for an unchanged read of 2.7%. Meanwhile, here in the United States, we have the release of March durable goods orders, and that's due out. Expectations call for a read of 1%. And then that's not all, as we have U.S. housing prices index, new home sales, and the S&P Case-Shiller home price index all on the docket. A lot of housing news on Tuesday. Then on Wednesday, it sees us down under with the Australian first quarter consumer price index due out. Expectations call for a read of 1.7%. Meanwhile, back in Germany, we have the German GfK consumer confidence survey due out. Expectations call for a read of negative 15.7. And then here in the United States, more housing data, pending home sales scheduled for release. Expectations call for a read of 1% month over month. Then Thursday kicks off back in Japan with the Bank of Japan's interest rate decision. Expectations call for that rate to remain unchanged at negative 0.1%. And then it's off to Germany with the release of the April preliminary harmonized index of consumer prices. Expectations call for a read of 0.6% month over month, 7.6% year over year, while in the U.S. first quarter preliminary GDP is due out. Expectations call for a read of 1%. And then Friday starts off with key first quarter preliminary GDP data due out throughout the European continent. We have releases from Italy, Spain, France, Germany, and the EU as a whole. In Germany, first quarter preliminary GDP expected at 0.2% quarter over quarter, 3.7% year over year, while for the EU, first quarter preliminary GDP expected at 0.3% quarter over quarter and 5.1% year over year. And then we move on to right here in the United States, March personal spending, March personal income both due out, as well as April Michigan consumer sentiment. Expectations call for a read of 65.7. Meanwhile, keep an eye on more updates regarding the Treasury yield and comments from Fed Reserve Chair Jerome Powell, as his comments have been moving the markets a lot as of late. And don't forget that the U.S. earnings season is still in full swing, so some of those releases have the potential of moving the markets as well. And until next week, reporting live from the New York Stock Exchange, wishing you all a great weekend, I'm James Sweeney, reporting for ICM.